Okay, so I want to do a quick video on Bitcoin. That symmetric triangle that I had pointed out the day before, we actually broke that. And the target for that is the height of this symmetric triangle, about 8% down, so at 17,435. We could get support here at this orange line. It looks like we're already starting to bounce, but this is support area from the previous exhaustion line, and then we ended up breaking out from it. It looks like we're getting a bounce here. We can look at the hourly real quick. The hourly is on an 8, and that 8 went below the 7 and the 6. So that's an that's an indication that this could be the reversal. On the TD sequential, the 9 isn't necessarily always the reversal. If you get an 8 that's just as low as the 7 or the 6, then that could be a reversal. And we probably had, we had the RSI oversold. So this is actually a good indication that we can get a reversal back up. Maybe we get to like 18.5 or something. But the target of this symmetric triangle is here, and with a potential support at 17,884. So symmetric triangles, they're actually 50-50. Whenever you see a pattern symmetric triangle, you have a 50% chance of it going up. You got about a 50% chance of it breaking down. So we had it here. It couldn't break it, but at that moment it wasn't a symmetric triangle, right? You need at least 3 touch points on a pattern for it to be, kind of confirmation of a pattern. So we had 1, 2, 3 touch points, and then 1, 2, kind of 3 here. I drew it ahead of time, anticipating this symmetric triangle, and that's pretty much what we got. So also, symmetric triangles will break up or break down about 75% of the triangle. So what I mean by that is, so this triangle is 55 bars long, and we broke down at 45 bars. So let's see what that is. So 45 divided by 55, that's almost 82%. So more than 75, but it's about 75% of the way they break down. So we got to break down. I had said before that we have these stop and reversal points, and I think that once we break those, that will indicate a time where that could be a buy the dip. I also said in this cycle, I don't believe we're going to get 15. We're going to get those 30 to 40% drops. I think we're going to get 15 to 25%. So if we would have taken this week as the high, that would have been your 15% drop. But since we recorded a new high, 15% drop would be right around 17,000, say, a little bit more than that, like 16.9 in that area. 25% would get us down to about 15,000. But what I'm looking for on these stop and reversal points, and let's go to Bitstamp because it shows it better, and I believe I have it marked there. Here. Okay. So let's just use the last cycle, but you could go farther if you wanted, but let's just use the last cycle. So here, I don't know. I don't necessarily need to put the TD sequential on, but here was the halving run up. And then we got a break of the stop and reversal point, and that was the dip. And then how long did we have to wait until we rallied back after that dip? We waited about 4 weeks. And then later on, stop and reversal point broke, and that was the bottom. That was the buy the dip. How long did we have to wait until price rallied? It rallied the next week. You could say this was a rally, but the next week it rallied 12%. So you waited a week after the dip. This one, it didn't quite break it, but let's see how long we waited until after the dip. A week. This one here, it broke it. We waited a week. This was towards the end of the cycle in September. It didn't quite break it here, but we waited how long? If that was to buy the dip. 2 weeks. and then here it dipped, and then the next week it dipped back up 36%. Didn't quite break the stop and reversal point. Towards the end, it didn't. You can use other indicators, as Mayer multiple would have been nice to use. We can look at that right now. Actually, September and November. I'll keep those in mind. September and November of 2017. We can look at the Mayer multiple and see what it was. But what I want to get across here is that whenever these stop and reversal points broke, that was the buy the dip. Another moving average that had been relatively good the last cycle was the 128 day. I'm going to set these all to 128 so we don't have other things. So let's see where those were on these dip days, or where that was on these dip days. Oh man, I might have to go all, yeah. I have to zoom out a lot. Here we go. All right, let's see. Oh wow, look at that. This is actually going to work out. So here, almost. It would have been 545. The low was 465. It closed at 540, so almost nailed it there. There was a little bit above it. There, I mean, that was all within the same week, right? So got close to it. There, it nailed it perfectly. There, it nailed it perfectly. So yeah, 128 was something that Willy Woo had made pretty popular. Is it going to work this time around? I'm not sure. I wanted to bring it up. But you can also use, like I said, stop and reversal points. And that could give you a good indication of where that dip buy is. So right now, you're on Bitstamp. That's at 16, about 16.2. So if we get a drop here from the high, that would be... Oh man, I got it on date. I want on price. That would be 18%. So within that 15 to 25% window, I think we would get. It's rising. It's rising about $600 every week. So next week it'll be say 6.8, 6.9, 16.8, 16.9. What's the target of our triangle? Go back to the 4 hour. It was I left it on here. It was 17.5. So yeah, I mean that could be 16.8, 16.9 next week. We dip down. That could be buy the dip. I am expecting that stop and reverse point to break at some point. I mean, or get extremely close to it at some point. Our RSI is almost bottomed out on the 4 hour. You know, I think we got all the way up to 83. We might get as far down as 40. It was the start of the new day, so we're already getting something that resembles a reversal candle, but I'd still be cautious because we have that symmetric triangle that broke down. And, I think we get to these, say, 17.8, 17.4 area. I do think we're going to get there. We can also get some consolidation. We up 5%. I mean, up 6%, down 5%. If we see consolidation here, that's actually very good because we're staying in this range and we're gonna. Because I also said we would range. I think we would develop a range area, which is this, right? And that's between 17.1 and 19.7. You can see it better on the daily because that's where I actually drew it. Yeah, see. So we could range here. That would agree with the symmetric triangle. It doesn't violate anything. That could also agree with the stop and reversal point if we don't break it next week. Or even if we do break it next week. We went all the way down to 16.2 here, 16.4. So we could go 16.9 next week. Or even those, we can go 16.2 because it's at 16.2 on the weekly. We can go that there, and then that would be the dip, potentially, or next week. I'd rather see it next week or the week after that, actually. And then we would have, so if that is the dip week, say that happens, that is the dip week, say we do it next week, this week. So we would wait, like I said, 1 to 4 weeks. So say 4 weeks. Let's just do 4 weeks. So 4 weeks, January 18th. And then price would start to rally. So based on that, I think we could potentially get, so price drop, let's just say, let's say we stay in this range, right? We dip down, we stay in this range, around 16.8, right? All the way out till 2 weeks here. Let's do 2 weeks. And then we would rally back into these highs and potentially break them here, right? Because I think the dip, we're not going to wait any more than 1 to 4 weeks. That'd be 1, 2, 3, one more week. So here. So I think by the end of January, at the latest, we would be back up to these levels that we were at, right around 20,000, with potentially, breaking out. I'll tweet this out along with this video of what the outlook is maybe for the next couple of weeks. But I analyze this daily, and we'll look at it. We have a set target for the breakdown, 17,884 and then 17,4. We'll see what happens. We're getting a little bit of a reversal candle, but I just want to go over that real quick. Thanks for watching.